Yep. And let me get through this presentation. Whoop. Slideshow. And we gonna play that slideshow. Make sure this is off the screen. All right, y'all. So once again, I am using the Latino Tax Pro 2025 tax preparation course. If you want the course is available and a book is available. A couple people bought the course already, but it's a pretty simple process. Let me know you want it. I'll send you a link and then I'll add you to my class. So they have like basically I'm signed on as a instructor, but they have to give each person access to the course. And I am not taxing. I am charging y'all what they're charging me. To get it on your own would be another like $120 more. But I'm making sure everybody can get it for the 225. They even encourage me to upsell it. Just upsell it and make you some money. And most people are selling the course for $400. And like, nah, we're not gonna do that. I'll make sure my team good. If y'all want it, I decided to do these videos, and these are private videos. Please do not share these links with anyone. I am technically not supposed to resell this or do this publicly, but I was informed that I could do it this way and train my team. And I'm basically making sure that the people who are absent have access to it. And that's the only thing that is on YouTube is for the people that missed the days to have access to this. This is additional taxes from Schedule 2. So, Schedule 2, Part 1 is where you report any additional taxes that adjust the Form 1040. And this could include things like Medicare tax and it's a couple other taxes in here. We will get through this. This one is a little it shouldn't be too bad of a slideshow, and I'm not gonna drag this out. But there are tax credits and you can get these credits and they make sure you can get more money and your clients can get these credits obviously too. So please be careful when you're doing taxes to know what they actually are allowed, because these are the adjustments and the credits that you use to make sure that they get some money back. The Schedule C's, we'll get to that later in the course, but Schedule C's have to be done right, y'all. I will pay closer attention to that this year. That's why I wanted this course to know that I'm looking for the right things and that we are recording the right things and getting the proper information. Understanding the alternative minimum tax, which is the AMT. The purpose of it is threshold and its rate. So the AMT applies to taxpayers with large numbers of deductions or tax preference items. So if you are filing someone's return and they are not taking the regular deductions, they want you to go through and itemize these deductions. You have to be careful to get them all the deductions that they are allowed. And that is why most people don't do that. But there are times when those deductions are the difference. This ensures high income earners pay a minimum tax despite deductions or credits. The AMT recalculates tax by adding preference items back to adjusted gross income. And for the 2024 AMT triggers, if for 2024 AMT triggers if someone exceeds a specific threshold based on a filing status and their income. AMT rates are 26% up to 232,600, and then it's 28%. The alternative minimum tax credit it helps you recover prior year AMT payments. So if you make these payments in a prior year, you should have some record of these payments, whether that's the tax return, if they mailed you something, a check, anything like that. You need to know how much the person paid. This reduces tax liability, but it cannot exceed the excess regular tax over tentative minimum tax. Calculations involve net minimum tax and tentative minimum tax for current and prior years. This is reported on Form 8801 and claimed on Schedule 3. There are a bunch of schedules even on the 1040. So you got like Schedule C, Schedule 3. There's other things, y'all. It's just important, even though the software do a lot of the heavy lifting. You have these like Form 8962 where you, if they tell you their situation, this is why you have to ask certain questions. Because if they tell you that they have these things, then you know to apply this to the return. um, Form 8962 calculates if taxpayers must repay excess advanced premium tax credits or APTC. Taxpayers purchasing health insurance through the marketplace must complete this form. You will see that it asks that, did you purchase healthcare through the marketplace? The reason that the software is so great is because it guides you, and it's pretty hard to mess up if you know what you're doing. The premium tax credit helps eligible individuals and families afford marketplace health plans. This credit is reported on Form 1040 or Form 1040NR. For more information, refer to Publication 974 and the instructions on Form 8962. Part 2, taxes for the self-employed. This is something you got to pay attention to. Also, as you if you are self-employed, you are paying both parts of the Medicare taxes. You are paying both because you are the employer and you are the employee. So pay attention to this. Require minimum distributions, avoid penalties, and retirement withdrawals. So IRA holders must take RMDs by April 1st. If you know someone with an IRA, if one of your clients have an IRA, it, you have to ask certain questions. Like, people don't know what they have going on. Sometimes you have IRAs and things like that from work, and all they know is, yeah, my company invests for me. They don't necessarily know where the investment is going. You have to ask the right questions. So failing to withdraw RMDs on time may result in a 50% penalty on the excess amount. Um, a waiver may be requested by filing Form 5329 with a letter explaining reasonable cause. Excess accumulation refers to funds left due to missed RMDs in various retirement accounts. They have to manage their retirement accounts. That's not technically our job. Our job is just to know what happened during the year. Did they withdraw something? Had they not withdrawn something? When they do, they get forms, they get information. Net investment income, or NIIT, there is a 3.8% additional tax. Um, and that's a tax on investment income or excess Maggie over filing thresholds. So this applies to income from passive activities, include most rental income. So when you have, uh, let's say you have a home, it's certain things that you're not able to write off. It's certain things that you're not able to claim for deductions. But rental income is claimed a certain way. There are forms within the software that you have to fill out and say that you collected a certain amount of rental income. And this is important to know. So when you are talking to your clients, it's important to ask them if they have rental properties. The filing status thresholds are $250,000 for married filing jointly, $200,000 for single filers, and $125,000 for married filing separately. This excludes income from active trades or businesses under IRC subsection 162. Gain from home sales excluded under IRC subsection 121 is not subject to NIIT. Once again, certain things have to be processed and taxed and filed a certain way. So if somebody sell a home, you should know these are the forms I have to fill out to report that they sold a home. It may be capital gains taxes, capital loss tax, like it's different things that you have to file. And sometimes it's not as easy to look for it. But even if you have a situation, y'all, I'm gonna tell y'all the truth. The first couple returns I didn't have much help from the lady that took advantage of me my first tax season, and I Googled a lot of the stuff. Like if I ran into a situation and I was like, dang, I don't know how to report this. But if you use Google and you say, okay, they sold a home, how do I report this on a Michigan income tax return or a federal 1040, it will tell you. Like it will give you guidance. If you go into the software, there are courses and it will guide you. So do not super guess this and do not text me for every little thing. You can definitely find what you're looking for. The Kitty Tax Overview or Form 8615. This applies to unearned income of children under the age of 18 or full time students under the age of 24. Parents can elect to claim their child's unearned income if the child meets specific age, income, and filing requirements. The term child includes legally adopted children and stepchildren, regardless of dependency status. And when they say regardless of dependency status, certain things happen to children. Children can go to boys' homes, juveniles, whatever. If that child is still considered your child and still legally your child, then you can still claim them on your taxes. That is a temporary absence from the home. So do not get overwhelmed with things like this. If they in boarding school, whatever, you have to know what you're filing. Um, if you are supporting them any kind of way, which includes expenses for food, lodging, education and medical care, you can get your deductions and your credits for this. Starting in 2020, the kitty tax uses the parent's marginal tax rate as established by the Secure Act. Part 3, taxpayer penalties. Penalties and interest for tax noncompliance. Tax laws impose penalties and interest to ensure taxpayers and tax preparers report and pay taxes accurately and on time. This is not to say that they are looking to bust your chops. They are not doing that. But tax professionals must follow IRS due diligence rules. We covered that the first week. This includes verifying client information and maintaining documentation. You have to maintain the documentation. I do not mind if it is all in the software, but people should not have you doing their taxes and they haven't given you an ID, they haven't given you a W 2. They haven't given you no proof of any other income and doing any of that stuff. And you just over there clicking away and filing away. And I look in the system and there's nothing there. These returns will not be processed this year, y'all. I'm telling you. I'm on it this year and I'm on it this year. I'm looking, even though I will not go through every single aspect of every return. I have too many people on the team and I'm definitely processing way too many returns for that. But I will make sure that due diligence is followed. I'm telling y'all, we got to stay on it. Penalties are added to taxes and are not deductible. Preparers face penalties up to $5,000 or 50% of their income if they understate tax liability intentionally or recklessly. These people are not trying to catch y'all up. These people are not trying to impose this on anybody. But if they can prove that you just didn't care and you just did anything, they will do it. Penalties include failure to file, failure to pay, and dishonored checks. Failure to file penalty. This penalty is 5% of the tax due for each month late and up to 25%. If both failure to file and failure to pay penalties apply, failure to pay reduces the failure to file penalty. If the return is over 60 days late, the penalty is $435 or 100% of the tax balance, whichever is less. The penalty can be waived if the taxpayer shows reasonable cause for late filing. Filing an extension does not extend the tax payment deadline, which is usually April 15th. Filing an extension gives you more time to file, but if you owe them, they still want their money. So make sure y'all understand that. Failure to pay penalty. The penalty is 0.5% of unpaid taxes per month, capped at 25%. If an installment agreement is in effect, the rate reduces to 0.25 per month, 0.25% per month. The penalty rate increases to 1% per month after a notice of intent to levy if unpaid after 10 days. Penalties are added on interest charges and late payments. Penalties are added to interest charges on late payments. Um, Listen, these penalties they just gonna keep adding up, y'all. When you hear people say they $20,000 in tax debt and all this, this is how it adds up. These people want their money. Most of the people that we're doing not owing a lot of money, but if they owe, let them know they owe. Don't let them run for that. The penalty may be waived if the taxpayer shows a good reason for a late payment. Underpayment of estimated tax penalty. Taxpayers must make timely estimated payments to avoid penalties. Penalty applies if estimated payments are less than 90% of 2025 tax or 100% of 2024 tax. If AGI exceeds $150,000, 110% of 2024 tax must be paid to avoid the penalty. So let's say the payment is $5,000. 110% would be another 500 on top of that. So they would have to pay $5,500. Penalty is calculated using Form 2210 or Form 2210F, which is for farmers and fishermen. The dishonor check penalty. The IRS may impose a penalty of taxpayer check bounces. If somebody paid with a bad check, the IRS will impose a penalty. The penalty is 2% of the check amount or $25 if the amount is under $1,250. If payment is required by electronic funds transfer or EFT, it must be paid. If payment is required by EFT but made otherwise, a 10% penalty applies. So if the payment must be made by electronic funds transfer and you send in a money order, a 10% penalty applies. Reasonable cause can waive the penalty, but willful neglect cannot. So if they assumed that they had to do it a certain way, then that can waive the penalty. But the neglect to do it itself does not waive the penalty. Information reporting penalties. Penalties apply if information returns like W-2s or 1099s are filed late by businesses or individuals. For tax year 2024, filing up to 30 days late incurs a $60 penalty per return. If filed August 1st or not at all, the penalty rises to $310 per return for 2024. Intentional disregard of filing deadlines increases the 2024 penalty to $630 per failure. For tax year 2025, penalties increase to $70 within 30 days or $140 after August 1st, $350 if not filed, and $700 if you intentionally disregard. Failure to file penalty. Taxpayers who file late may face a failure to file penalty. The penalty is 5% of the unpaid tax for each month late up to the maximum of 25%. Late file return with a refund and substantial understatement penalty. So this is when you file late and you get a penalty for understating, whether it's income or something else. Like people know what they make, y'all, and even if they don't, my lady uses Style Seat or one of those. If you do hair and you take money that way, then you'll be able to see what you made. She basically looked it up. It took 3 minutes, and if not, then you got Cash App or Zelle or some other bank account. You should separate your business income and your business expenses from your personal income and expenses. So you should have a business bank account and you should have a personal one, and you will be able to know what you actually made. Taxpayers owed a refund must file within 3 years from the original due date. This will be most of our clients, so they have 3 years to file if they do not owe. Reasonable cause may exempt the taxpayer from the late filing penalty. If they thought they had money and they didn't, that is a reasonable cause if they can prove it. The penalty for substantial understatement is 20% of the understated portion of the tax. So if they understated $10,000, then they will have a penalty of 20% of that, which would be $2,000. So if filing more than 60 days late, the minimum penalty is $135 or 100% of unpaid tax, whichever is less. A substantial penalty applies if understatement is more than the larger of 10% of the correct tax or $5,000. Criminal penalties for tax violations. Taxpayers may face criminal prosecution for tax evasion, willful failure to file, fraud, or identity theft. Don't do it. Make sure they have their stuff in order. Section 7201 states that willful tax evasion is a felony with severe consequences. Convicted individuals may face fines up to $100,000, imprisonment up to 5 years, or both. Those convicted must also pay the cost of prosecution. This can get pretty ugly. They're gonna say that you owe them $100,000 just for the case. So you're gonna lose a case and owe them. Y'all just do the right thing. Tax evasion and related concepts. Tax evasion is illegally avoiding taxes by underreporting income or falsifying deductions. If you are talking to somebody and they say, "Can't you just do this?" Do not falsify deductions. Either they get it or they don't. The IRS looks for signs like income understatement to detect evasion. Fraudulent failure to file can result in fines up to $250,000 for individuals and $500,000 for corporations, plus possible prison time. Tax avoidance is illegal and involves using lawful methods. I'm sorry, tax avoidance is legal. So it's a difference between tax avoidance and tax evasion. So evading your taxes means you are trying to falsify documents, underreport income, and do anything to evade paying the right amount of taxes. Tax avoidance is when you use the laws to give you the best tax return you can get. So just know the difference. The IRS evaluates a taxpayer's intent by reviewing, reporting, accuracy, documentation, audit behavior, and consistency over time. Negligence, disregard, and understatement penalties. Negligence is failing to exercise reasonable care or keep proper records when preparing a tax return. Please keep the proper records, y'all. Y'all can keep it right in the system. So I do keep my records outside of the system only because I've had issues before. So I do keep my records outside of the system, but you don't have to. As long as I can get to them, it's fine. Disregard includes careless, reckless, or intentional violations of tax rules. Penalties may be avoided if the taxpayer adequately discloses a reasonable basis. A substantial understatement penalty applies if the tax understated exceeds 10% of the correct tax or $5,000. The understatement can be reduced if supported by substantial authority or adequate disclosure with a reasonable basis. Penalty for filing frivolous tax returns. A taxpayer may face a $5,000 penalty for filing a frivolous return. What a frivolous return is when you know you don't have anything coming and you filing a tax return, you don't owe, you don't have nothing coming, or you already filed a tax return. Any of these type of things could be frivolous. It lacks sufficient information or contains clearly incorrect tax data. That could be a problem. They may be filed to delay or interfere with tax law enforcement, which means they just doing anything and they know that it's not right. Altering the signature lines on the return can also be considered frivolous. The frivolous return penalty is in addition to any other penalties uh, assessed. So, any questions, y'all? Let's get there. Okay, oh, I'm not tripping. Let's get to big chapter 6. Let's go. Here, telling me I need to share this again. Share so y'all see this. Chapter 6 is all about payments and tax credits. These are two very important chapters, y'all. These are what people pay you the good money for is actually knowing how to work these tax credits. So you gotta pay attention to these particular two courses, these two chapters because they are so important. Payments and tax credits, learning objectives. Understand the process and due dates for making quarterly estimated tax payments. If you have a business and you are not paying your quarterly taxes, then you are stuck with a bill at the end of the year that could be astronomical depending on where you are in your business. Most people know how to keep up with what they owe and what they have going on, but some people do not. So keep up with this. I did pretty good this year, and I am definitely keeping up with what I owe on my taxes. Be familiar with the methods and procedures for paying taxes owed and receiving a refund. You should know how this works. Recognize the characteristics and implications of refundable and non-refundable tax credits. Um, know how to determine eligibility, calculate, and claim tax credits such as the credit for the elderly or disabled and the California Earned Income Tax Credit. Non-refundable credits, Part 1. Non-refundable credits reduce the taxpayer's total income tax liability. They are calculated in the order listed on Schedule 3, Part 1. They are listed on the Form 1040, Schedule 3, Part 1. Foreign tax credit. This avoids double taxation on foreign source income. So if you're making money, let's say it's something overseas, you have to understand the foreign tax credit, or if the client is making overseas. And this applies to pay or accrued. This applies to taxes paid or accrued to foreign countries or U.S. possessions. So what you don't want to do is you don't want to file that they had money taxed over there and then is not filed correctly over here. So they end up getting taxed for both overseas and here. You just got to be careful. It's reported on Schedule 3, Line 1, with Form 1116 if required. This can also be claimed as an itemized deduction on Schedule A. Form 2441. Y'all, when it say, you see how that said both, what happens right here, this can also be claimed as an itemized deduction. So if you file this as itemized deduction on Schedule A, it will populate to Form 116, 1116, all this. Like it populates where it need to be. The tax software is a lifesaver. So just know that, just know what you're looking for. And as long as you know what you're looking for, once again, you can Google where it's supposed to go, or you can go and put it where it's supposed to go and it go to wherever else it is. You've probably done that. Everybody with Shay has done taxes last year at least. And you know that you can go file something in one spot. And when you go to the another part of the form, it's already there. That's the beauty of using software and not having to do everything by hand. So Form 2441 is the dependent care benefit. So employer paid benefits for care while the taxpayer works. If you have a child and your employer is paying for child care while you work, this is what form you'll have to fill out. It is very simple. It will ask how much was paid or whatever. Just it's so simple, yo. Just know that people have to keep up with what they have going on. Benefits may be pre-tax through an FSA. This care includes food, lodging, education, and entertainment. The care centers must meet local state regulations. This cannot be your cousin them. The day camps qualify. Overnight camps do not qualify. Non-refundable credit for care expenses. The credit is up to 35% of qualifying work-related care expenses. Credit percentage drops as your income increases. There's a minimum of 20% credit allowed based on income. The expense limit is $3,000 for one, $6,000 for two or more dependents. Reported on Form 2441 or Form 1040, Schedule 3, Lines 2. It'll be, if you do it either way, it's going to populate the other one. So just know that. Who qualifies as a dependent for child care? So that has to be a child under 13 and claimed as a dependent. If they turn 13 during the year, it's prorated. If it's a disabled spouse and they need care because they're unable to care for themselves, you get dependent care. Disabled dependents who can't care for themselves and qualify, um, they must earn less than $4,700. They have to file a joint return, and they could be claimed by someone else. That means if you are claiming somebody and if they earn more than $47,000, then they are disqualified from getting this care credit. If they are claiming someone and the person they claim filed jointly with someone else or themselves, they cannot get the dependent child care credit. If they could be claimed by someone else, they don't get this credit. You got to know those two. So the requirements to claim the credit is we just went over that. We don't have to keep going through that. But if the taxpayer and spouse, if they've earned income, expenses must allow both to work or seek work. Payments can't go to the dependents of the taxpayer, and you must file jointly if married, with exceptions. Earned income test. So both spouses must have earned income to claim this credit. This includes wages, tips, and net self employment earnings. Losses from self employment reduce earned income. This is what happens when you see, like you do a Schedule C and they get more money. It's not because it's a Schedule C, it's because it's going to change their earned income. Non taxable combat pay can be elected as income. It's best to calculate credit both ways for the maximum benefit. Work related expense requirement. These expenses must enable taxpayers to work or to seek work. You There's a list of them when you go through it, y'all. The software is a lifesaver. So you must be, uh, it must be for the care of a qualifying person. The employer dependent care assistance. This is included with the employer benefits and it must reduce eligible expense limit. This includes direct payments, daycare value, or FSA contributions. This is included in W2 Box 10 or K1 Box 13, Code 0. Um, Excess benefits over care expense become taxable income. Limits and home care considerations. Exclusion limit. Lowest of 5 listed criteria capped at $5,000. Excess overpaid care is reported as income on Form 1040. Use DCB label on dotted line. Home care may require FICA and FUTA holdings. So these tax holdings are based on certain codes. And in the software, when you put certain things in there, it's gonna do this automatically. The American Opportunity Tax Credit, or the AOTC. This credit is where you can get up to $2,500. 40% of it may be refundable. The Maggie limits $180,000 for married filing jointly, and it's $90,000 for everybody else. This is based on the first $4,000 of qualified expenses, and it's reported on Form 8863 and Form 1040, line 29. This is what you need to qualify. Uh, these are the expenses that qualify. You got tuition, fees, books, and supplies. If the student must carry at least half-time course load, no felony drug convictions allowed. Let me make this clear. This does not mean you can't have a felony drug conviction at all. It just means you can't have it when you're claiming this. Materials qualify even if not bought through school. Student qualifications for AOTC, not completed the first 4 years of post-secondary education. This is important. So I just finished my master's degree and I could not claim this the last year. But the other years I was able to claim this. I claimed a school deduction. I think it's a 1098T or something. It's something like that. But they'll get to it. But you will see this. You get this from your school or your client. You'll let them know if they claiming a kid and the kid is under 24 and they want to claim this type of credit, they have to at least been a student half time and they have to be in a credential program. But you will get a form. What is it? Is it 1099T? It's something. But you request it from your school and they give it to you without a hitch. It's like pretty easy. Lifetime learning credit, or the LLC. This is up to $2,000 per return. And you can, if you spent money on books, courses, coaches, anything like that to help you in your professional life, whether that's your own business or your job or whatever else, you can claim a lifetime learning credit. This covers tuitions, fees, and job skill improvements. It's not for sports, games, or hobbies. Form 1098T reports qualified expenses. scholarships, grants, and adjustments. This is it. So I was on it too, 1098T. So this is usually sent by the institution by January 31st. You can go online and get it a little sooner. That's what I used to do. Just go online and get it. This includes enrollment status and adjustments for prior years. Review 1098T and keep a copy for your records. Retirement savings contributions credit. So this is credit for contributions to retirement accounts like IRAs, 401ks, and SEP IRAs. These SEP IRAs, they like I'm telling you, y'all, some of your clients will not understand this stuff. So you have to know what you're looking for. The maximum credit is $1,000 or $2,000 if they are married filing jointly. This is available to taxpayers aged 18 and over and not claimed as dependents. Maggie must be below 38,250 if they're single. Excuse me, y'all. 57,375 if they're the head of household, and 76,500 if they are married filing jointly. This is reported on Form 1040, Schedule 3, Line 4. Residential energy credits. These are available to you. You have to know where to look. I covered this in my walkthrough. I am going to post a walkthrough in the band app. But I covered this. It's a certain place you look to claim these credits, but they will save you some money or get you a larger return, whichever one. Here's a quick overview of the clean vehicle credit. So if anybody have a clean vehicle that they got between 2023 and 2032, they get credits for those vehicles. And this amount is based on the vehicle age, the purchase price, battery capacity, and the income. This is reported on Forms 1040, Schedule 3, Line 6F. You have to attach Form 8936 to Form 1040. Form 8936 overview. This is for the clean vehicle credit. It's 5 parts to complete this credit. It's you the Maggie or the modified adjustment gross income, whatever. The Maggie this 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 means everything is added. You know what I'm saying? So if it's modified, that means that certain things are taken off. It's not a full AGI. It's modified. It means they took out something for retirement or whatever else, whatever IRAs, whatever else you invested in, you ended up with a Maggie. So um, there's a section for business and investment use vehicles. There's a section for personal use and previously owned vehicles. Know the difference. Parts of Form 8936. So the Maggie calculation for eligibility. Then you have your business investment use vehicles. Then you have your personal use vehicle credit determination. Then you will know if you get credit for previously owned clean vehicles. And then we move on to the last part, which is credit for qualified commercially. To claim this credit, you have to attach Form 8936 to Form 1040 or Form 1040 NR. This includes required supporting documentation. You must maintain records for 3 years after that. Report any recapture in future years if applicable. Credit reduces tax liability dollar for dollar. Qualifying entities for commercial credit. This is available for nonprofit. This is available for-profit businesses using depreciation allowance. So with depreciation, you are saying this is depreciating 6 years. The value is X amount of dollars. So we are depreciating it this amount per year. Once you make that determination, then this is what they're talking about. So know what depreciation is. This includes tax exempt organizations with specific vehicle conditions. Entities must meet usage and technical qualifications. This credit is based on business use and not resale. Primary use must be in the U.S. Required documentation for commercial credit. You must maintain vehicle purchase documentation and basis, manufacturer certification for vehicle eligibility, technical specs showing battery capacity, and support calculations for credits claim. Document business use percentage and U.S. primary use. Vehicle qualification, manufacturer, and usage requirements. The vehicle must be from a qualified manufacturer per 1RC 30D D1C. Check IRS list to confirm the eligibility. and it must be used for business purposes and not for resale. Primary use must be in the U.S. The vehicle can't have received prior clean vehicle qualification, technical specifications. Vehicles less than 14,000 pounds with a battery of more than 7 kilowatt hours. Vehicles more than 14,000 pounds and a battery life larger than 15 kilowatt hours. Fuel cell vehicles may qualify under IRC 30B. Technical specs essential for credit eligibility. Confirm specs via manufacturer documents. So if you have any questions, y'all just look at the documentation and you can see whether these vehicles are this, or you can Google it. Like if you know the make, model, and the actual cut. So vehicles have different cuts. You see SLT, SRT, whatever. Those are different cuts or different packages as you may. The Denali is a cut. So you have to make sure you have the right cut of the vehicle when you put it in, because these are how you'll get the specs online. Just telling you a quicker way to do it. Clean vehicle credit overview of calculation. So this calculation credit involves comparing three methods. You must consider the vehicle type and the fuel technology. The final amount is the smallest of all the methods. Each factor ensures fair incentive allocation. Example illustrates this step by step. Maximum credit limits by vehicle weight. We just went through this for the most part. Percentage of basis method. So fully electric vehicles is 30% of basis. The hybrid vehicles are 15% of basis. So the basis is generally the purchase price. So if you pay $20,000 for a vehicle, you get this credit at 30% of that base, and you could report it and get the credit for it. This method varies by vehicle fuel type, is often higher than other methods. Incremental cost method, the 2024 value. So this is compact PHEVs, 14,000 pounds or less, $7,000, 14,000 pounds of other EVs, $7,500 if they are 14,000 pounds or more. I'm sorry. And then the EVs that are 14,000 pounds or less than is $40,000. So values updated annually, one of three comparisons. Final credit determination. Here's a quick example. Compare your max credit, your basis percentage, and your incremental cost. So you have 30% of this max credit. The the that's the basis. The 50,000 dollars. 30% of that is 15K. So your max credit is 75K. I mean 7.5K, and then your final credit is 7.5. Other non-refundable credits. Schedule R, this is credit for the elderly or the disabled. Non-refundable credit under IRC subsection 22. This applies to elderly or permanently disabled individuals. 15% of the subsection 22 amount. So whatever you got in that amount, it must meet age, disability, and income criteria. Physician statement needed if they are under 65 and they are claiming a disability. Schedule R, eligibility requirements. They must be 65 years or older and meet disability criteria. The disability must begin after 1976 or before 1977. They must receive taxable disability benefits, must not reach employer's mandatory retirement age, and the income must be within specified limits. Here's the specified limits, y'all. So schedule R income limits. If you see this, you know that if the AGI line is 17,500 or more, or if they have non-taxable benefits of $5,000 or more, and that's single, then we go through married filing jointly. As you see the numbers here, we can go through this on and on. But if the last one is married filing single, married filing separately, and if they lived apart from their spouse for a year, if the AGI line is 12,500 or more, and if they have non-taxable benefits of $3,750 or more, it's all in the paperwork. Child tax credit, Schedule 8812. Non-refundable child tax credit is $2,000 per child under the age of 17 in 2023 and 2024. The refundable portion of the ACTC is 1,900 in 2024. The phase out begins at 400,000 if it's married filing jointly, or 200,000 if it's not, if you are just filing single or had a household. You must have a valid social security number to qualify. The qualifying child must be a U.S. citizen, national, or resident. You have to be so not everybody is a they not everybody have a social security number and all that. Some people may have they may be a part of the 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 outside continent or people we have treaties with to do this. So you just got to know. And if you have any questions, I'm telling you, if you know that they have been in whatever Hawaii and you guessing about it, all you got to do is put it in Google. It'll tell you. The ACTC is calculated using Schedule 8812, Parts 2 and 3. Qualifying child for the child tax credit. So to qualify, the child must be the taxpayer's child, stepchild, sibling, step or half sibling, or descendant of any of these. So it could be your grand stepchild or your grand brother, your grand niece or nephew, whatever. So do not provide if they do not provide over half of their own support. If they've lived with you more than half the year, they do. If they did not file a joint return, and they need to be a U.S. citizen, national, or resident, alien, or adopted by one. Qualifying person for the other dependent credit or the ODC. This is to be claimed as a dependent by the taxpayer, not qualify for the CTC or the ACTC, be a U.S. citizen, national, or resident, alien, or they can be adopted by one. Have a valid 10 by the tax return due date. The 10 is the taxpayer identification number. If you don't have social security number, you should have a 10. Be under the income threshold of 400K if they are married filing jointly, and if they are any of the other filing statuses, it's 200,000. Improperly claiming the CTC, the ODC, or the ACTC, if you what that is just claiming these credits in error. This can get you penalized. So just be careful. Payments and refundable tax credits. Payments and refundable tax credits are refundable credits can exceed tax liability and trigger refunds. These are treated as payments towards your taxes. So when you have these credits, so deductions and credits are different. When people have credits, it sounds exactly like what it is. They're giving you a credit for your return. So this is treated as a payment. It's a credit. Overpaid withholding and estimated taxes may be refunded. Estimated tax payments. A quick overview of that. These are reported on Form 1040, line 26. This includes current year estimated payments and prior year overpayments. Divorced couples must attach a statement explaining joint estimated payments. Estimated tax payments, 2025 deadlines. You see this April 15th, 6th, June 16th, September 16th, and then January 15th of 2026. The amount overpaid. Overpayments can be refunded by direct deposit or a paper check. IRS offers refund statuses via Where's My Refund within 24 hours of acceptance. The refund options include full, partial, direct deposit, or applying toward next year's taxes. Use Form 1040, lines 34 to 36, and Form 8888 to manage refund preferences. Joint filers can split refunds or purchase series savings bonds. Earned income credit or the EIC. Here go a couple key rules, y'all. The taxpayer must have a valid Social Security number and earned income if they want to get earned income credit. It only makes sense, y'all. So married filing joint filers must both meet the residency and citizenship conditions. You cannot use forms 2555 or have investment income of over $11,000. Must have qualifying child or meet age residency rules without one. 2024 AGI limits vary based on number of qualifying children. Valid Social Security numbers for the EIC. The qualifying child must have a valid Social Security number except if they died in their birth year. Social Security numbers with valid for work only for INS, DHS authorization are acceptable. I-10 holders do not qualify for the earned income credit. Remember that. Taxpayer or spouse with changed immigration status should request updated Social Security numbers. EIC requires child to meet 4 dependent tests: relationship, age, residency, and joint return. A qualifying child of more than one person. Only one taxpayer can claim this child related benefit per qualifying child. So the benefits include EIC, child tax credit, and head of household status. You cannot use a child to be head of household, and then if the mother or the father is over there, they cannot use the same child. Only one of you guys can claim them as your head of household dependent. All benefits must go to one person. This cannot be split. The breaker rules apply when taxpayers cannot agree. The EIC is denied for one child. Another eligible child may be used if available. EIC for taxpayers without qualifying children. EIC is available even without a qualifying child if specific conditions are met. Taxpayer must be 25 to 64 years old at the end of 2024. This cannot be claimed as a dependent or be qualifying child of another. They must reside in the U.S. for more than half of 2024. 2024 income must be less than $18,591 or $25,511 if they are married, filing jointly. Schedule EIC worksheets. Schedule EIC is required for taxpayers claiming EIC with qualifying children. They must list the child's name, social security number, birth year, months, live with the taxpayer, and the relationship. This is all in the software. Worksheets A, the wages. Worksheets B, self-employed, help calculate EIC. Worksheets are not filed with the return. Keep worksheets in the client's file. EIC disallowed. IRS may disallow EIC for various reasons. If the earned income credit is not available, they don't always know, y'all. I'm telling you, they don't always know. Sometimes you'll file this and it kick it back out, but they don't always know. But ask the right questions. Form 8862 is needed if EIC denied or reduced since 1996. Attach Schedule EIC and Form 8862 to claim the disallowed credits. Failure to provide info leads to IRS deficiency notice. EIC taxpayer penalties and combat pay election. IRS penalizes. The IRS penalties for negligence or fraud related to EIC or the EIC being disallowed for 2 years for negligence and 10 years for fraud. Tax preparers may face penalties for insufficient due diligence. Trust me, y'all, due diligence is the key word for 2026. We have to be on our non-taxable combat pay may be elected to decrease the EIC. Whew, I was trying to run through that thing, y'all. But we ran through it. Do you guys have any questions? I'm trying to send those. I'll send out. We do 4 and 5 today. 1, 2, 3. We did 5 and 6 today. So I definitely will send out 7 and 8 tomorrow.
Everything was straightforward, and then you told us if we do got questions to ask Google.
I don't
We
mean
gotta
don't
ask
ask.
them first.
No,
I'm
no,
gonna
that
ask
ain't no,
Google.
no, not on these. I mean when you working, I'm telling you,
I
y'all.
know
I
what
did
you
it.
mean,
Yeah,
but I was
yeah. You
cracking up.
funny
We
as
just
hell.
you gotta ask
Listen, dog.
Google.
Ask them, though. They will send you to the right part of the form. I'm telling you. And if they tell you the form, you can put it in the software. Shay having used it. I know you used it before, Des, and I know y'all had raggedy software. So Shay is going to appreciate the simplicity of the software, and they made it even better this year. So they're tightening it up. So before the season, we'll see like minor things happening. They definitely putting it together. So um the app should work a lot smoother. I mean, I didn't have bad problems this year. Last year I did, but it probably was because old girl was shooting her move and I didn't have access the way I needed it. But last year I had my own Ethan basically. Now I really got my own Ethan, but I was working under somebody else's, so I had access to everything. But now we have access to the back office, to the trainings, whatever else. And I'm telling y'all, this year we live and kicking. So if y'all don't have any more questions, um, Dez, I know you may have more people. Um, if try to get them, try to get them over here, so we don't got to worry about it in the middle of the season. They know they coming. They know they coming.
Yeah, I mean, I can only say so much.
Yeah, they
Mhm.
know. They know they. No, I know. Yeah, they know they coming, and you know what I'm saying. But they don't need to be switching in the middle of the season and kind of like disrupting the flow. So let's get them on board when we can get them on board. Shay, if you know anybody else, you can bring them too. Um, I've been doing all right,
For
y'all.
sure.
I ain't been pressing y'all about new people because it's been kind of decent. I had a couple people say they gonna do it and then they just like kind of like fell off. One thing about me, I ain't gonna chase you. I don't chase women. I sure ain't chasing down people for doing something that's gonna make them some money. If you don't want to do it, you don't want to do it. And if I gotta chase you down, that means you probably not gonna be a good preparer for me. I'm gonna have to like give you pep talks every day and all of that anyway. And I that ain't really what I want to do either. I want self motivated, ready to roll people.
Ain't no problem. You already know it's not gonna work.
I know it ain't, and I'd rather just
You try
listen,
to
y'all.
make it sound good. The Libra in
Yeah,
you.
most
Yeah.
definitely, y'all. Listen, I'm telling y'all the God honest truth. Even like these meetings, you got certain people missing the meetings every week, and then when the season started, they be like, JP, this and that. We got a whole new. We like when before the season start, like probably by the end of this week, we'll have a whole new link to log in. So the people that's not on there or they not in band app or whatever, they just think they gonna jump on and be like, dang dog, you done miss every meeting. I don't mind you missing
You get
one or
to
two.
jump on there, get to call you with all type of questions.
Man, JP, it's a whole nother link, y'all. We got a whole nother link because my office moved under my service bureau. So we got a whole nother link. It's like a whole different thing. Like it's just a different ball game. And I got like um I told everybody they get two discounted returns. A lot of the stuff that I put in place was because I was like last year I had like little issues. So I had one guy, I kicked him off the team. He did a few returns, so he probably did like 8 returns or something. But he did another about half of that and was like, "This is my cousin JP. Can we just do? I mean, they didn't get a return. Can we just do? Can I just do $50? And can I just do this?" And I'm like, "My guy, I can't do $50 for all your cousins. I still got to make my money. Like, you know what I'm saying? Like, I'm gonna give you a couple of them, but so everybody got two people.
I feel like you gotta figure out what give you headaches and try to get rid of them.
Man, I got
I
listen.
got a client. That's what I felt about that client, Durain, I told you about. I told him, I said, look, I'm probably gonna implement some type of system for y'all clients that get rejected, and it's y'all fault, and y'all be on my head, like, cause you ain't had your ducks in a row, like you ain't had your documentation and pop, like. I can't. You can't rush me. We're gonna have to implement. It's gonna cost you to rush me. Put it like
Man,
that.
listen. When I tell you, I'm telling you, business man, we'll talk about it on Thursday, but I'm getting rid of listen, I got rid of a trouble client. Well, I sent them a 7 day notice because they haven't paid in a few weeks. And do you know, I fast as I sent that email, I had somebody else reach out to me, bro, how much you charge for this? The same plan. Literally, probably no BS. It was probably like 12 hours later, probably 10 hours later. Like before I went to sleep, I
One door
sent that.
closes, another
Yeah.
one opens.
Man, ain't nobody got time for that. Like, you know what I'm saying? I'm not chasing around money that I earned. And especially if you own the software, then I got you hooked up to AI and different things like that. And I don't got time to do that. And I was over being nice. I've been nice. I've been nice like most of my life, but it's time to get to the money. I'm telling y'all, I talked to that white man, and that white man really pulled my coattails. Like, listen, bro, it's money. You know what I'm saying? It's money on the floor. You over here being cool. So all text will be in effect. If y'all haven't signed y'all contracts, please sign the contracts. I want everybody to have everything done. Renew y'all
I think I saw
P10s.
mine the first day.
Definitely renew y'all P10s. We don't need no hiccups in the middle of the season, y'all. I'm tightening up on my business. Even coming to do these every week is something about me tightening up and being more consistent with my business. Me and the group, I got the I think both of y'all in the group, but I got the real life XP. I'm trying to make sure I'm there on time and just being active, and I'm gonna do the one-on-ones with everybody starting Tuesday. So I'll let people know tomorrow that whatever times they'll be available for at least 30 minutes. I want to do one-on-ones this week. And the one-on-ones would just be it's just assessing your business and what you got going on. I got like a whole form of information that I'll ask, but I won't just do like a questionnaire. It's pretty much like conversational, but I answer my questions. So that's it for today. If you guys don't have any questions, this will be available tomorrow or Tuesday. My Monday's just funky. That's why I usually say Tuesday.
Well, yeah, everything was straightforward. Got me some notes in.
You get the handouts.
Yep, I downloaded them earlier from the band group.
Yep. There we go. So everybody, everything working. All right, bet the band app working. The other girl on my tax team, Monet, was like, "You got to use the band app, JP." So I'm glad that it's working, and it's easier for me to just go on there, add the files. So I'll try to do those Tuesday too. So I'll get the YouTube video up so people can watch the replay, and I will get the band app updated with the files Tuesday. I don't make too many promises tomorrow. But all right, Shay, and all right, Des, I'll talk to you guys.
All
Well,
right.
I'll be talking to y'all like Tuesday, so I'll talk to y'all
Right. See you again
Tuesday.
soon.
Yeah,
All right.
definitely.
Y'all have a good evening.